Hey guys, Akil Stokes here. Welcome back to another episode of the Weekend Trading Edge. We have a lot of new subscribers that are here on the channel, getting closer and closer to 57,000. If you guys are brand new, thank you for joining. And well, this is the Trading Edge video where I come in and share with you the top trading ideas, sprinkled with trading lessons that are on my radar for the week ahead. Now, real quick, you may hear a little bird singing in the background. For you guys that were in the live room, I have not gotten rid of that wasp. It is still terrorizing me, so the window is open in case it decides to fly out, and I hope it doesn't disrupt the video too much. So we're gonna get started with a follow-up on one of last week's opportunities, which is going to be the euro yen. We're gonna kind of do this real quickly so we don't spend too much time on it. But if you guys remember, going up to the weekly and going back to the magical year of 1991, which is somewhere around here. Did I pass it? Here we go. Price action has come to a previous level of structure, and then we had another level of structure that we're aiming for higher, which we can worry about later. So going back down to the daily and zooming back to where we're currently at on our price chart, zip, 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 zoom, you can see that here on the daily, we still haven't broken and closed above that level. We have breached that level, we have spiked above that level, we have tickled that level ever so gently, but we did not break and close above. And if you guys know my rules, right, this is a perfect follow-up. We did the unofficial 3-part series on discretionary trading where we started with a video here on YouTube. We put a podcast in the middle, is that creamy Oreo middle part, and then we end it with a video on YouTube. This is one of those rules-based discretionary opportunities where in order for me to have a violation of structure, because, well, you know, what is a violation? If it touches it, is it a violation? If it goes past it, right? I personally need what's called a higher high and a higher close, which means price needs to both break above and close above that previous level of structure in order to be a violation. And I cannot make a prediction higher unless we get that violation. Now, this is going to get a little bit weird in a little bit, but I just want you to kind of write that rule down and have it stick in your head. So for me, we do not have a violation. Therefore, I still cannot look for bullish trend continuation opportunities up to that magical line that we drew above. Now, this situation, however, may be different depending on what type of trader you are and how you organize your trading. And what I mean by organize your trading is that we should have a trading plan. It's a rules-based document that we stick to. And part of that trading plan is your trading rules, your rules for engagement, what you need to get involved in the trade, but it's also your rules on how you analyze the market. See, I'm a big believer, you don't have to trade this way, but for my price action trading, I find value in what's called multiple time frame analysis, meaning that I take a look at different time frames. I take a look at a higher time frame to gain perspective, and then I go to a lower time frame to get more of a detailed look. And this trading opportunity is going to differ depending on your perspectives, right? So for me personally, in my swing trading, the daily is the higher time frame, then I go down to the lower time frame. So all of my decisions, right, the violation, the higher high, higher close, must come off the daily time frame. So the fact that we do not have a higher high, higher close there means I can't predict a continuation upwards, which means pretty much that trading opportunity is done for me. I have to wait till the thing happens on the daily. But if you are a trader that values a lower time frame, let's say you use a 4-hour as your higher time frame and maybe an hourly as your execution time frame, well, things are going to get a little bit different. And hopefully I did the cool little zoom in thing, like a sinister or like a TV thing teasing you before it goes to commercial. I'm trying to get fun with the editing, right? Anyway, here on the 4-hour chart, we do have a higher high, higher close. Oh, right? So this changes everything. If you are a trader that uses the 4-hour as your higher time frame, or if you have a rule that says you don't care, you don't need your higher time frame and lower time frame to match, all of a sudden you have a violation, a break and close above that level, which means you can now predict a move higher. And if you are predicting a move higher, now one method you can take is looking for a pullback, and that is what we have. And we actually have it in 2 different ways. So we had, and I'll walk this through in a realistic sense for all different types of traders. So if you're a trader that uses a higher high, higher close entry, meaning that you need like a pin bar doji like this, and then a higher high, higher close entry, this would have been your first entry for the bullish opportunity. And you can see that you probably would have been skunked out and vanished to the realm of unprofitability. But also understand that if you're a trend trader, and here's the secret that they don't tell you about trend trading, right? Everyone thinks trend trading is so fun. Hop on the trend and ride it until it ends. Yeehaw, right? The truth is sometimes you have to be wrong a lot. Because if I'm looking at this as being my trend, and tier one traders, right, we know the rules. When does the trend violate it? Say it with me. When the outside return is violated, right? We have to understand that we may get a signal here and it may lose. Then we may get another signal here and it may lose. And we may get a signal here and it may lose or may win. But the fact is sometimes we have to take multiple swings in order to hop on that trend. And that can be a little bit discouraging because you will sometimes lose more than you win. And again, one of the secrets about trend trading is that typically if trend traders tend to lose more than they win, and that's okay, because when you do win, right, you do cool stuff like this, where you have a very, very small, that's in the opposite direction, excuse me. You have a very, very small stop loss, blip, and you have a big old risk reward, right? So you can see if I have a 5-to-1 risk reward on average, if I lose 2 trades and win 1, I'm still going to be in the profit. And I can show you, I'll insert a little cool ratio matrix based chart to show you that. So don't go crazy thinking about this. It comes with the territory. So you had one entry potentially right here, if this were your entry reason and risk reward made sense, right? We now have a second one coming down, and this is going to be called a complex pullback. This actually follows up on the Q&A session we had, a couple weeks ago, where we were talking about fractals in the market. I'm sorry, I'm talking to tier one members now. Fractals in the market, and we had a trader that was confused about trends within trends within trends. This is, in a sense, a small bearish trend, right? We have our 3-point move, but it never actually violates the outside return. So it's a small bearish trend within a big, larger trend, right? Does that make sense? So it's still a bullish trend, but it's just a small bearish trend. That's the pullback within the bigger one. So we have a complex pullback here, and actually this is going to be exactly an AB equals CD pattern. If I take my swing high to swing low right here, why am I holding my hand like that? I'm used to having a pen or something. And I copy and paste that, and I drag it on. This is going to be what's called an equal measure move, or an AB equals CD pattern, or a 1-to-1 measured move. We can draw out some Fibonacci's and look for confluence, swing high to swing low, that same A to B section, and back up. You're going to see we come down to a 127 bullseye. I can draw a Fibonacci retracement up from our pullback, swing low to swing high. You can see that we got a 618 in that area. A nice inside level of structure as well. So a decent level that we're coming down to as well. If we go down to our hourly chart, you're going to see at this level, depending on your rules, another discretionary thing, you also may or may not have a double bottom pattern, which can also be a reason for entry. So this can be, if this were the first reason for entry up here, this could be a secondary reason for entry right there. Oops, bang, arrow there. Now, just to do one more thing, because we talked about how this can go in multiple waves. If I wanted one more opportunity, there's a level that really stands out for a deep pullback for me as well. It's going to be this level right here. You guys know that these big candles, I call them elephants, noise, right? And I like to take the consolidative period before those elephant candles as a key level of structure. So we have a nice box right there. We obviously have a bigger zone of consolidation looking to the left of it as well, right? So this is how we narrow down that zone. It's big and disgusting, and well, Kyoto doesn't help having, what, 150 pip zone is that gonna be? Not quite, 100 pip zone right there. So I narrowed it down a little bit. I can narrow it down even more by looking for a psychological number, right? 177 even, right? Those are psychological numbers. Humans like psychological numbers, the whole human behavioral thing. And I can do one more thing. I can add on my volume tool and drag it from the swing low to swing high and see if there's any type of spike in that level. And you can see our biggest spike in volume, meaning when these bars on your right shoot further to the left, is going to be right in this area too. So if I'm looking for a third indary, what's the word? Third indary? I don't know. whatever. I trade, not speak. This is going to be a nice zone that I can keep my eye on as well. So multiple levels. If you guys are looking for a potential bullish trade here on Euro Yen, if not, then you still got to wait for that daily chart to complete. Next, we're heading over to the Euro Dollar. We got a few fun things happening here on the Euro Dollar. We have an advanced pattern formation. We also have a trend continuation trade, and we have a situation where you can do both. And this is actually going to be a really cool example of analysis. So going to our magical 4-step process, IPDE, right? I want to identify what price action has recently done at the end of the week. And I'll draw out a horizontal line here at my previous level of structure. And going on the lesson that I told you guys earlier, we have a break and close below. So if we have a break and close below, then, see how it's all systematic, right, and rules-based, then I can predict a move lower. Now, the next question is, if price is likely to continue lower, well, Akil, where are we likely to go lower to? I should have just done a little hum thing in there. Where are we likely to go lower to? Well, the same thing we did on the last example with that elephant candle. I'm in an emoji mood today right here, and I apologize for all the stomping you hear in the background. That's not the wasp. I told you it was big, but it's not that big. It's just children and stuff running around on the weekend. But I have this consolidative period beforehand. This is going to be a nice zone to look for right here. So that's my prediction point. Now, how do we handle this prediction point? Well, we have two things that we can do. And this is what's cool about technical analysis. I promise I'm not going to get into a rant responding to that person on YouTube video that says technical analysis isn't a proper way to analyze the market and no one could be consistently profitable doing it, despite me being consistently profitable for the last 15 years and many other traders being consistently profitable much longer than that doing it. Not going to get into that at all, I promise. Maybe a podcast episode if I feel like I'm in a ranty mood, but I'm not going to do it, even though technical analysis takes into account all of the fundamentals and human emotions and everything that this trader said that technical analysis doesn't show you. Not going to go on that rant. I promise you. I promise I will not do that. But here's the cool thing about being a technical trader. There's no such thing as continuation analysis. There's no such thing as countertrend analysis. There is just analysis, and how you use it, it depends on your style. So again, I use the old hammer example where in most hammers, instead of the ballpoint one, the hook hammer, it's a single tool. But you can hammer a nail in, you can take a nail out. So it all depends on how you use it. This analysis is the same way. We've identified this as an area of importance. We've identified this as an area that price is likely to go to. And we have two choices. One, we could be a counter trend trader. So we say if price action goes down to this level, then I'm looking to get long here and trade it back up. Or we can say that if I'm a trend continuation trader, I'm looking for price action to go down to this level and make profit and then exit down here, right? So that skill of technical analysis doesn't only help with your entries, it helps with your exits as well. Words, there we go. Man, I had a good thing going and I butchered it. This is what's called think like the other trader. So let's talk about the trend continuation analysis because that's what's most important right now since we haven't gotten down there. Let's once again go down to our lower time frame. Let's kind of shrink up like Miss Frizzle in her magic school bus. And we can see the lower low, lower close. We can see that this is the pullback prior to it, right? Price action extended down. And then this would technically be our retracement right here. We'll see that on a lower time frame. But we came back up to this level right here. Before shooting back down. I cannot get my tools correctly today. Jesus. Anyway, so what we would be looking for here if you are a pullback trader is for price action to pull back, retrace back to this level, and then look for an opportunity to sell short down to that lower zone. Now, one more thing I have for you on here. This is if you're an advanced pattern formation trader. We have a potential butterfly. Butterflies are weird. I'm not going to walk through every way to trade a butterfly, but the way I like trading butterflies are this. Taking Fibonacci inversion, going from swing high, which is going to be our A leg, to swing low, which is going to be our X leg, and I'll draw that on so it makes sense. And then looking for that 127 extension down there. So an X to A, and a deep B retracement, a C retracement, and then a D completion right down here, right below that 15 even handle. I don't know how close that is to our zone. Sorry, I heard the wasp again. It's really haunting me. I haven't slept in days, guys. It's a little bit above our zone here, but this is another opportunity right here for a bullish trade if you are a butterfly pattern trader, just remember butterflies are difficult because there's no built-in level of structure to hide your stops below, and that could be weird depending on your trading philosophy. Next, let's take a look at the dollar yen, and this will be an example of a counter trend trading opportunity. So, same boring 4-step process. If you're new to the channel, guess what? I'm not here to sell you shiny things and give you brand new ways to trade each week for likes and entertainment value. Although if you like this video and it's entertaining you, right, please hit that like button. That does good things for me in this channel, helps me grow. It does good things for you because it puts my videos in your algorithm so you can get more of the things that you like. But one of the criticisms that I get is that, Akil, you come in each and every week and you do the same thing. And yeah, that's trading, right? Consistent analysis plus consistent execution equals consistent results. I suppose if I ever wanted to ruin my good results, I can come in and do something different, but don't see why I would want to do that. So I'm going to be consistent and boring and educational. And the truth is, the same things that have worked in the market for decades still work today. Sometimes in slightly different ways, and that's where the skill of trading comes in handy. But you don't need to reinvent the wheel every day to be a trader, right? If you're looking for entertainment, then trading is the wrong place to do that. You know, have fun with the profit you make from trading. That's where you can get your entertainment from. Anyway, IPDE, identify, predict, decide, execute. Where are we at? Let's draw a line in at our current highs and look left. Structure leaves clues, and look at that. We are right at a previous level of structures. What I'm going to do is I'm going to draw a little box in it. I'll just keep the line in here, right? So here is the highest close, and let's draw another line for the highest high. It's a nice little petite structure zone we have. You can see price action touched it, right? Big bullish candle, high momentum candle rallying up there. Finished the week with a doji candle and an inside bar. A doji candle is an indecision candle. You can see this right here. Price action moved to the left, then price action moved to the right, and then price action stayed in the middle. I guess it was up and down, but I couldn't really do that in my chair too much, but you guys get the point. An inside bar is just when a current bar completes, completely within a previous bar. And there's cool indicators probably on whatever platform you're trading that you can look for that, and you can see that these things are they're everywhere. A lot of our traders on the platform like this, right? Inside bar there, inside bar there, inside bar there. They're everywhere. It's kind of cool. But anyway, let's go back to what we're looking at here. As I go down, so I identify that we're at a previous level of structure and that we have not violated that structure. Therefore, I'm looking for a counter trend move, right? A bullish move. As I go down to the lower time frame, the 4 hour, you're going to see that we had, and I'm actually involved in this trade. I hope I didn't jinx it when I said that. Sorry, I have a bad habit of jinxing things when I talk about it. We had a double top right here, right? RSI was oversold on the first top. Boop, RSI is down here, oversold. My oversold is at 80 because I like really, really extreme things. I like my coffee piping hot. I like my drinks freezing cold. I like my overbought, really overbought. Stay thirsty, my friends, right? So, and then we have a second test of structure right here. That's going to be our double top. That was actually my entry reason to get short. It was a Friday, so we did nothing but just kind of sideways crab walk for the rest of the week, but hopefully we see some follow through as the week continues. Now, where am I looking for price to go? Well, look left, structure leaves clues. Ali, if you're listening, this is one of those cases where this is the most recent level of structure right here, inside structure. We're talking about kind of the discretionary nature of analyzing targets and when inside structure should be a level versus when it shouldn't be a level. This is one where it should be a level because there is no other relevant level of structure around it. It is our most recent relevant level of structure, I should say. And I'm not as aggressive enough to say, like, I think we're going to continue down here because my counter trend punk brain gets scared and says, I don't actually think it's going to happen. I want to make my profits and get out. So I think price action is likely to go here. If we bring in a Fibonacci retracement from my swing low to swing high, hold on real quick. All right, back guys. I had to smack a few kids around. Just for the record, I did not smack or touch any kids. I just put on my dad voice. Guys, stop. But we're back and now the birds are going crazy, right? Where was I? Targets. Let's take our Fibonacci retracement tool from our swing low to our swing high up here. and you're going to see that we have I did not click it on, Akil. I'm having a day. Let's try it again. Fibonacci retracement from our swing low to our swing high right here. You're going to see that we have a 3D2 Fibonacci retracement right above that level. Perfect place to look for opportunities for this short trade. So just a few trading opportunities this week, but I want to dive into more details on each of them. Two more things I need you to do before you go, aside from subscribe and like and leave comments and questions below. One, make sure you register for our upcoming trading workshop. It's going to be the end of November. It's a 3-dayer, right? Going back to the old school big annual year-ending event. And two, still getting a lot of questions about trading computers. Akil, what do I need? What should I have? I am not the person that knows a bunch about trading computers, but I do have a free resource for you. There's a QR code on the screen. There's a link in the description box below. Scan it, click it. It's going to take you to a free trading computer guide. I personally used this guide when I bought both of my trading systems, one last year and the other one like 15 years before that, and they've worked really well. So use the trading guide to either understand what you need to have in a trading computer so you can build your own or buy your own, or if you are interested from buying from them, I think you get a little bit of a discount if you use the link I gave you. I'm not 100% sure. I'm not really a big affiliate person, but I believe that's the case. So hope you guys enjoyed the video. Hope you guys enjoy your weekend. Until next time, plan your trade, trade your plan. Go Toffees, go Sixers. Going away now, slowly. I'm gonna hit my bike, aren't I? Still going. See ya!
I wanna be the best in the game, invest in my name. Check no restraints, I'm obsessed with the pain. I ingest, I retain, assess and I change. Possessed by the thought I'll be free one day from society's restraints. Money, clout and fame, mud, disease, a plague. We all love to hate, have to play the game, have to make a name. All our insecurities are on. This is